Hello, everybody. Jim Malone here, coming to you live on Dallas Trading Floor. Well, it does look like we got a bounce here on the Nasdaq. The Nasdaq did bounce higher today, but there's continuing bank fears. So, really, I think the best course of action right now is to stay largely in cash. That's sort of where I am. I'm 100% in cash right now, basically just waiting for shorting opportunities. Whenever the market moves like it moves now, where we've moved, basically we're in an uptrend under pressure. No, we're not on. We're in a correction. Whenever you're in a correction like this, it's really, really good idea to be heavy on the cash, light on the stocks. That's just the way. That's just kind of the way it rolls. I mean, that's just kind of the way it rolls. So right now, I'm definitely not heavily invested at all. As a matter of fact, I'm not invested in anything. I'm currently in cash, waiting for shorting opportunities that I think are going to present themselves. Now, typically, the best shorting opportunities happen, before there's a market change like this. But I think with the continued weakness in the banks, we're likely to see more opportunities when it comes to that. So just kind of be really, really cautious in the market. And, I think that's just the way to go. Let's take a look first at the QQQ, which is which is basically the ETF that covers which is the ETF that covers the Nasdaq, which definitely has been the one that let's see, get that camera back. There we go. Boy, I tell you what, um, one of these days I'm going to get this so that it gets it right. But for right now, we're sort of under the under the pressure of the camera god. So let's go to that QQQ chart. Let me just put that up here real quick for everyone. There we go. Okay. So this is the Qs. This is what's happening with the Qs, and I want to kind of run over here and show you. We did have a nice bounce today, but I'm still leery of the whole situation. We did have this nice bounce. We're almost up to 300, and we're up after hours. So it doesn't definitely looks like we may, hopefully, at least for right now, be reversing higher. That would be nice. But still, I just think right now we got to be super careful. If we put a reversal line in there, we're basically looking at possibly moving above this. This is the QQQ, and it covers the Nasdaq. Now, interestingly enough, if we go down and we look at the volume, we'll see that we're well above normal volume. By the way, this is a logarithmic scale here, so it kind of shows that. So hopefully, we'll get a correction here. But right now, I think that basically with the market being the way it is, I think it's really prudent to just be very, very cautious, and kind of tend to cash right now. Try to be in cash as much as possible, because it definitely is a situation where it can be difficult. So let's take some questions. Thank you so much for looking. Tough market. Boy, you're not kidding, Sandeep. It is a tough market. That's why I'm all cash right now. And I did close my short on Silicon Valley Bank and on the XLE, but I haven't really done anything since. What I did is I shorted the Silicon Valley Bank. I then closed it. After making a nice little pop on it. Then I also shorted the XLF, and then I also went long on Charles Schwab. But I've also closed that. So I'm just going to jump on over to Charles Schwab to see if there's any opportunities there. SCHW is the symbol for Charles Schwab. Let's jump on over to there. It's definitely come up, but look at how much it's lost. See, this was my buy right there, and then I wrote it up, and then I've since sold out. This is where I sold it, right about 57 here. But right now in the after hours, let's take a look. It's up in the after hours. It's at 60. I definitely think this is the new norm for Charles Schwab. So I don't know if there's any opportunity buy this one here. I don't know if there's any opportunity to buy it, but definitely interesting stock. This is Charles Schwab. But again, I'm currently 100% cash, so there you go. Hey, thanks, Sandeep. Let's take a look at Tesla to see if there's anything that we can do there. TSLA. The thing about Tesla is I do believe that there is some constraint at about the $200 level. This is Tesla. The shares of Tesla. As you can see, we came up and we definitely bounced off that 50-day line, and then we've come up and now we've hit the 21-day line, and we've gotten some rejection there. So I want to look at the 30-minute chart to kind of see. Yeah, see, we definitely have some resistance right really above about 182 or so. But again, the trend is downward. So right now, I don't think it, right now, unfortunately, I'd love to buy Tesla. And this sort of, if we had a third up day, then I might say, but I think we've changed to a downtrend. We may move up again, but in the after hours, it's coming down. So really, I think you're going to get a floor basically at the 200-day line, at the 50-day line. Currently, the 50-day line is 170. So expect Tesla to pull back to about expect Tesla to pull back to about 170. So that's kind of what I'm expecting. So expect to pull to about 170. So that's kind of what I'm looking at here with Tesla. I think I think we definitely have potential, with Tesla to see it bounce. But the reason I'm saying 170 here, the reason I'm saying 170 here is because that's where that's where the 50-day line is, and so that's kind of what I'm thinking is going to be the support here. But we'll see. I mean, it did bounce off it did bounce here. Let's see, it did bounce on Friday, all the way down to 163, and then it got support. So I think what we have to do here is if we want to buy Tesla, we're going to have to buy it close to that 50-day line. And currently that 50-day line is about 170.38. You can see it's about 5.91% above that 50-day line. That's where I think it's going to bounce. So we might be able to start picking up some shares at about 170 there, but I wouldn't hold them. I would try to buy them very close to 170 and then on reversal, and then possibly ride it up, possibly to about 180, 190. But right now we're at 180. So right now, I think with Tesla, we're just going to be pulling back some more, and it's not going to be fun. And yeah, so that's kind of that's kind of the take I have on Tesla right now, unfortunately. Thanks, Charles. Let's look refiners versus drillers and majors. That's a really good question. Let's see if we can look at that. Here's what I'm going to do. I'm trying to think. I'm trying to think how I can define that. But let's see if I can do that. We want to look at majors and drillers. Let's look at the refiners. So let's look to see what that is on the list here. Let me see if I can get this. Let's see if I can get this analysis for you. Okay, I'm going to go over here to basically the groups and oil refiners. Let's see, the oil and gas. Let's see, oil and gas refiners. G2900. Let's write that down here. G2900 versus, and you were saying the refiners versus the majors. Integrated drilling. Let's look at integrated. G 13 17. Okay, so here's what I'm going to do. I'm going to see if I can come up with something that will show that will show us these we'll kind of put this into perspective. So let's go over here to G 2900. Okay, and this is the oil and gas refiners and marketing. And then let's look at that. And then also let's look at G 1317. All right. So here's kind of how we're going to look at both of those here. So there we go. All right, so here's what we're looking at here, Charles. We're looking at the difference between, basically going back about 6 months here. We're looking at the difference between the G1317. This is the majors here, okay, and these are the refiners. So you can see right now the drillers. The drillers are outperforming the integrated oil companies. So the big oil companies, the big integrated international oil companies, have underperformed the refiners. So if we look at that, we can see. Let's take a look at the refiners here, and let's pull the refiners up. By the way, everybody, what we're doing here is we're looking at the difference between the oil and gas refining and marketing, and I'm going to put this up on the screen here. And we're going to show you what is included in this group. But this is the refiners and marketing. Now, this is outperforming the integrated oil companies. Very interesting. So let's kind of see who's in this area. This is the top. This is going to be things like Marathon Petroleum. So if we look at everybody in the group, it's going to be Marathon, Valero, Phillips. So these are going to be the refiners here again. And then if we jump on over to the integrateds, that's where we're going to look at the integrateds, and that is G2900. That's the list that I have here. Let's get that in there. So if I can get this up here, there we go. All right. So if we're looking at the 17. So if we're looking at not working for me here, G 1317. There we go. So this is the integrated. This is the oil majors here, and it definitely looks like the refiners are doing better. This is the Exxons, the Chevrons of the world. This is the XLF, basically, the integrated oil company. So these people in the last, really since February, have been doing worse than the refiners. The refiners, G2900, that one has been doing better, but we've started to see some weakness here, of course, with oil going to the lowest it's been. Basically, it dropped significantly today. So we've got to look also at the oil price, and that the price on West Texas Intermediate has gone down, WTI. See, what we're in a cash crunch right now, unfortunately. There we go. Up. Let's see if we can get that up. This is the price of crude oil that we've had. You can see we're in this downward trend on crude oil. And we made our lowest low here. See, this is the 70. This seems to be the floor for crude. We're currently now at 71.33. That's the price of West Texas Intermediate. So we're starting to see some deflation in the market. Why are we seeing deflation? Because there's a cash crunch. This is why the banks are having trouble. Is the fact that there is limited amount of cash. Most of the cash now is going to pay off debt. That is why we're seeing the banks fail. We're also seeing the price of oil fall. So basically, right now, the best investment currently is cash. Believe it or not, that's why I'm all in cash at least until I can find a better opportunity. All right, let's take a look at UAL. Let's see if there's a bounce on United Airlines. Um, I'm not particularly fond of these travel stocks. I wish that I could be more encouraging on. I wish I could be more encouraging on these travel stocks. But if we take a look at it, United Airlines has moved very much down. You can see that, and again, there's just this overall cash crunch out there, and the amount of it's just gone right down. It's almost at the 200-day line. This is a sell. I don't think this is going to bounce. What I would do here with, I think that UAL is a sell. I think it's a sell right now. I wouldn't be buying this one. I just wouldn't be buying UAL because it does look like if it moves below that 200-day line, and it's very close to that right now, that could be a situation that it could go much, much lower. Here's the thing, it's currently only about 3%, 3.7% above that 200-day line. If it falls below that 200-day line, you're going to see it go much, much lower. I think that if UAL falls below the 200-day line, we could easily see it come down. We could easily see it come down to the $30 range. Okay, see, that's kind of where I'm looking at the floor there. So if it breaks this line here, which is the 200-day line, I think that potentially it could go that low. So actually, this may be a short. I'm not willing to short this one yet, but what I want to see is I want to see it come down. I want to see it rally to the 200-day line. If that happens, if it comes down and rallies to the 200-day line, I will probably short this one. So I'm going to say short UAL at the 200-day line. So short UAL at 200-day line. So that's where I would look to short it, but I'm not going to short it now. You never want to short something when it's in a downward, when it's trending lower. You want to wait for it to rally up to an index line. You want to short as it crosses that index line. So right now it's not a short, but it's getting ready to potentially be a short. All right, let's take a look. Is something going on in Snap aftermarket? Interesting question. This is coming from TikTok, and I want to put this up here for everybody. Snap, I think there might be SNAP. This might be a good short. They are having issues. Let's see what the after hours says on Snap. Currently it's up. That's interesting. So there's a bounce. Okay, so it was currently at $10.34. That's where it closed. It's up $10.99. So something's going on here. Somebody's sneaking in there and buying it. What I think this is, I believe this is a short squeeze. Let's take a look to see if indeed it is. Okay, so the short squeeze, yeah, this is a short squeeze. If you look here, and what's happening is that the short interest is 1.7 days. Now, what I'm going to do here for everyone, I know this is kind of a weird calculation, but here's what you do. The short interest is 1.7 days on Snap, and you multiply it times the average amount of shares that are traded on a daily basis, which is 34 million. 156,000. I just do it that way, and I'm getting that amount of short interest. And then you look at the float. The float is 1115. So currently we have a significant amount of the amount of short interest on Snap is over 6%. So it is definitely looking like this is a short squeeze. This is a short squeeze that's going on. So this is really interesting. I wouldn't buy this one. I wouldn't buy this one right now. No, it possibly is a short squeeze, but what I think is happening is it's come down to the 200-day line. Let's take a look at that. Yeah, it's come down to the 40-week line, which is 1068. And then definitely looks like it's getting some support there. Let's look at the daily chart. I can't really see it on the daily chart. Maybe I can zoom in a little bit on this daily chart to see. And what I'm doing here is I'm just zooming in a little bit on the daily chart to see if I can see what the action is on Snap. Yeah, okay. So basically what happened is we had this spike. You can see that volume coming in there. That's what caused this spike. It spiked over the 200-day line, and then it fell and it got support at the 50-day line. Now, interestingly enough, the 50-day line is below the 200-day line. That means that this is in what they call backwardation. I know that sounds like a weird word here, but that means that this is falling in general, because if the correct stacking would be, 10-day line, 21-day line, 50-day line, 200-day line. That would be the correct stacking. But instead, the 200-day line is on top, followed by the 21-day line, followed by the 10-day line. But the 50-day line is below that. That means that it is moving lower. And so it definitely got some support here at the 10-day line. So I wouldn't buy this one unless it was over that 200-day line. I would not be buying this. So it's very interesting. Thank you for bringing that up, but I think you got to avoid it. It's just too difficult. It's just too difficult to figure that one out. So I would avoid this one, at least for right now. Hey, thank you very much, Ashok. OTKA, interesting stock. Let's see if I can pull that up. Um, let's see if I can pull that one up. Yeah. Uh, OTKA. Uh, okay, that's interesting. Oh, OTK. Is that right? Am I getting it right? Oh, sorry. It's OKTA. There we go. There we go. Sorry about that. Got the wrong. There we go. Okay, so here we go with OTKA. Well, one good thing that we can say for this, it's moved above that 200-day line. That's important. So that's looking good, but it definitely looks like it hit a ceiling. So let's see. Let's look at the 30-day chart, the 30-minute chart. Yeah, there's definitely resistance at about 86. You can see it right there. So, and there's a sell mark at the end of the day. So again, this one, I don't think this one is looking that good. So I would avoid it. Let's take a look at the checklist on it. Yeah, 68, 67 checklist. This isn't bad, but it's not. I don't think this is a winner. I don't think this is a winner. This is uh, OKTA. That's the name. That's the name of the stock um, here. So that's the symbol. That's the symbol in this one, OTKA, and it does look as if, yeah, we've got some resistance here, and it's a fairly weak chart. Yeah, this is a weak chart. I just wouldn't. I wouldn't. I wouldn't go with this one, unfortunately, either. Sorry to be Mr. Negative Nelly here, but I don't think we want to go with this one either. It's too weak. I think there's better. I think there's better fish out there in the ocean. All right, let's miss Mr. Jeet. Thank you so much. Let's look at AMD. AMD is a critical stock, of course, because it's a leader in the fabless chip area, and the fabless chip area is a very good place to be fishing, because I think that, if we're going to see any turnaround in the market, this is where we're going to see it. We're going to see it in the chips, and AMD is definitely a leader in that. That's no question. This is a nice bounce. It bounced above that 200-day line. It's above the 21, and it's above the 10-day. So let's look and see if there's a ability to buy here. Yeah, it's just a little bit extended. Unfortunately, it's 9% above the 21-day line, which makes it extended, and that is unfortunate. But if we look at it without the pattern wreck, we can see that it looks like it just moved above this 88. So, you know, could we buy it here? Yes, we could start putting a toe into the water here because it has moved it into a higher high. Let's look at the checklist. Now, normally I wouldn't buy a 67 checklist, but I've been watching AMD for a while. It's definitely improving on the strength, and we're seeing some volume come into it. I wouldn't bet the farm on this one. I don't necessarily really love the chart, but this is in an interesting area. This is in the semiconductor fabless area. This is an ascending chart where we have the golden cross, which means that the 50-day is moving above that 200-day line. This is bullish for the group. The group is led by Lattice Semiconductor. This is the one that I've been playing, is Lattice. I think this is probably the better of the two, better than AMD. I like AMD a lot, but I like Lattice more, and the reason why I like it more is because checklist wise, it's better, 100% on the checklist, and technically, I think it's a little better too because we're only 3% above the 21-day line. Remember, when you're buying an ascending stock, especially a stock that is in a group that's getting some power, you want to buy it as close to that 21-day line as possible. This is only 3.2% above the 21-day line. So if I had to buy a semi right now, I would buy Lattice. But let's take a look. What I want to do is I want to compare Lattice with AMD. I want to compare it with AMD. So I'm going to look at I'm going to look since the first of the year here with AMD and see if I can get, see if, oh, that's too long a period. So I want to look at one. I want to look at, yeah, this is Lattice, and let's compare it to AMD. All right. So there we go. Okay. So that's interesting. All right. So I'm going to show you the result that I came up with here, comparing AMD, which is with Lattice, which I think is the winner. They're right even. So very interesting. Since the first of the year, if you invested a dollar in both of them, you'd basically have $1.40. So I think they're both very good. It does look like though AMD is trending lower, whereas it looks like Lattice is moving higher. So I would probably, instead of going with AMD here, I would consider possibly going with Lattice. So instead of AMD, consider LSCC. That's what I would do, just because I think it's starting to outperform. Oops. I think it's starting to outperform. I think LSCC is starting to outperform Lattice. And if you want to be in the semis, and this is one of the few really investable areas in the market, I think that's where you want to be. I think this where I think this is where I think is where you want to be. Just because the semis are getting love, just about everywhere else is not. So tough market. Thank you very much. How about Wolf? This is Wolf Speed. I like this company a lot, and part of the reason I like this company, Roman, and I think you're right on here, is that Wolf Speed, Wolf WOLF is uh, WOLF is in the silicon carbide semiconductor area, and this is the hot area, especially for especially for EVs. Why? Because this has superior temperature properties relative to the older style, just straight silicon, not silicon carbide. Now, here's the problem with Wolfspeed. We're seeing it's in a downward trend. We don't really ever want to buy anything in a downward trend. It just doesn't make sense. So we're in a downward trend. The question is, will we get it bounced here? I think there's a possibility that we're going to get some support at 60. Why? Because if you look at this, that looks like in the past there's been some support there. Now, here's the thing about Wolfspeed. I wouldn't buy Wolfspeed. And the reason I wouldn't buy Wolfspeed, WLF, is because it's underperforming the other silicon carbide companies. Let's take a quick gander at compare Wolfspeed with LSCC or some of the other ones. So let's go over here to Let's compare Wolf Speed with, I'm going to put LSCC, and then let's go from the first of the year. There we go. Okay, so this is the reason why I am not as bullish. Oh, oops. This is the reason I'm not as bullish on Wolf Speed as I am on LSCC. This is a comparison chart since the first of the year of LSCC versus Wolf Speed. If we started basically at the beginning of the year at 100%, Wolf Speed is off about 8 to 9%, whereas LSCC is up about 37%. So I definitely think that LSCC is trending higher. I think that Wolf Speed is trending lower. So that's my take on Wolf Speed. But I definitely like the area that it's in. Ah, yes, the RSI on Wolf daily is way oversold. That is a great observation there, Roman. Let's take a look at the stochastic indicators to look at the oversoldness on it, because I definitely think that you're onto something there. So let's take a gander at that real quick and see if we can move back to Wolf Speed. So basically, what I'm doing here is I'm looking at the I'm looking at the stochastic indicator for Wolf Speed to look at the under over supply in the buying. So let's take a look. Yeah, if we put the stochastics up here, you're right. It's way. You'll notice on this scale that I'm showing you here, it goes from 20 to 80. Now, this is the 80-20 rule that you've probably heard about. It's the Pareto's law. And basically, as it moves lower, that means that it is getting ready possibly to turn upwards. Why? Because it's way oversold. Because we're below 20% on that stochastic indicator, that means that it is way oversold, and we probably will get a bounce. The question is, where will we get the bounce? That's if the market in general stays in touch. It looks as if the bounce may come here at 60. This is where I think we possibly have some support. Currently, this stock, Wolf Speed, is at currently this stock is trading. um, let's turn off the stochastics here. Yeah, there we go. So if we turn off the stochastics, I know I'm going really technical here. We're at 62. I think it can fall a little bit more, maybe to 60, but we don't want to buy it until it moves above. I wouldn't buy this until it moves above that 50-day line. Okay. The reason why is because it's in a downward trend. It may fail on the reversal higher. So I wouldn't buy it. I really wouldn't buy it below. I really wouldn't really buy it below the 200-day moving average. So I just wouldn't buy, even though it's oversold and it's probably going to reverse higher. I just wouldn't be a buyer until I got much more strength, because overall we're in the overall trend on this stock, as you can see, is lower. And if we draw the reversal line in on that, you can see that we're still in a downward trend. So I would not buy Wolf Speed here. I just wouldn't buy Wolf Speed here. All right, let's take a look at Apple. This is coming from TikTok here. This is from Mr. Simon 2. I guess that's it. Let's take a look at Apple. AAPL, of course, is the symbol for Apple, and it is absolutely one of the key stocks in the Nasdaq. So definitely something that is very key. So let's look at Apple. We definitely finally have moved above that 200-day line. So we're getting some support there, but it's off after hours. I just think the big caps techs right now are very much under pressure, and I'm just not as interested in them. In the tech space, the only area that I'm really interested in are the chips, and I am interested in the chips. So if we were to compare Apple with Lattice Semiconductor, um, yeah, okay. This is a graph basically of in the last year of the performance of Lattice Semiconductor versus Apple. Okay, and this is what I think is interesting to look at here. I'm going to kind of show you this in the chart. If we're looking at Apple, Apple has been flat or lower in a year. This is where I'm drawing a line to see where we started out. This is last year for Apple. We're currently below last year. So if you held Apple for a year, you would actually be down a little bit. Not a lot, but you'd be down a little bit, maybe 3-4%. If you had instead had Lattice Semiconductor, you would have been up an incredible 65%. So what I'm trying to say to everybody here is that we don't the former leaders, the big cap techs, Microsoft, Apple, those kind of companies, they have not performed. They have not performed. And it does not look, it looks like the leadership is moving away from those kind of stocks into the chips. The only stocks that I'm seeing that looking good are the chips. I am not long anything right now. I'm all in cash. But if I'm probably looking to buy in the chip space, this is where I think that the most opportunities lie currently. So thank you so much for that question. Great, great question there from TikTok. All right, let's see if we have any more questions from TikTok. Let's look at NVIDIA. NVIDIA is an interesting one, of course, because it is a major leader. It was a major leader last year. And the thing about it is that with AI, you're going to see a lot of interest in NVIDIA, but it's weaker than some of the other smaller semiconductor stocks. So let's take a look at NVIDIA right here. There we go. Okay, so this is NVIDIA, and it's definitely trending the right way. This is what you want to see in a chart. You want to see a chart moving higher from lowers to higher. Currently, NVIDIA 242. It's up after hours. Let's see how close to that 21-day line it is. We might be able to start to nibble here. Now this checklist is still pretty awful at 50%, 56%, but we have a very strong relative strength at 27 at 97. So we're in the top 3%. I do like this stock, but I just don't think it's at a place where we can buy it. Yeah, on the pattern recognition, we're about 5% above, in 350 days, we're only 5% above the consolidation. You know what? I think we just got to wait on this one. And this is really hard. I think we got to wait for a base to form. So I would not be buying NVIDIA right now. And let's just, for fun, let's take a look and conform that with what I consider is the number one stock in the semiconductor space. That's LSCC. And compare the difference. Yeah, and this kind of, unfortunately, this tells the tale. This is why we need to be looking not at not at the past leaders, but the future leaders. Currently, the future leaders is going to be something like an LSCC. This is a year. If we look at back a year here, definitely take a look, and you can see NVIDIA has performed only up 5% in a year. LSCC is up over 60% in a year. So that's what we got to look at in terms of shares. I don't think we want to be in the laggard now. The leadership is moving to NVIDIA. Well, thank you, everybody. Oh, wait a minute. We have a few more here. ASAN. Let's see. Let's analyze ASAN really quickly, and then that'll probably be the last one for today. ASAN. And let's take a look here. Asana, this is a network management company. Interesting. This is a software company. Again, this has not been as strong an area as we would like to see it, but it's definitely gaining. It's definitely gaining strength. Here's the problem with computer software right now. Currently, this area of the market is, in terms of its leadership, there's 197 different sections of the market. This is at 107. So this is not a leading area in the market. It's in a downward trend. I would be extremely careful buying this one. We don't want to buy something really that's in that's not in a leading sector right now. This has a 87 relative strength, which is good, but I think that there's just better areas to be in. Right now, if we look at the strength in the market, we really, if we're buying anything at all, we want to be buying in the very best sectors of the market. And if we look at the best sectors of the market by rank, the number one sector in the market currently is steel producers. Believe it or not, that's really weird. But if we look at the layout here, the number one area is metal parts and distributors. There's only three stocks in this area, so we can really throw this one out. Steel producers, believe it or not, that is actually doing very well at 16, not 16 stocks there. Building, residential, and commercial, 22. But the area that I think that we got to concentrate on right now, that's the strongest area that has the most opportunity, is the semiconductor fabless area. There's 33 stocks in this one, and it's number 4 on the list. And this is where LSCC is. So that's where I've been concentrating, looking for opportunities, is where the strength is. And currently, the strength is in the semiconductor fabless. But overall, the market is terrible. So I wouldn't be pretty much in anything. Terrible. But if we're going to look for strength, we're going to look for strength in the semiconductor fabless. Thank you, everyone, so much for looking at my little show. I so appreciate it, everybody. By the way, if you're not already a member of Dallas Trading Floor, super duper easy. Just go to www.dallastradingfloor.com. It's free to sign up and put out some stuff. We do have, by the way, I want to put that out there. We do have a great opportunity for the options mastery course. Gavin McMaster is doing this. There's a special offer just for people that are watch Dallas Trading Floor, and that you can find out more about that by going to stan.store/Dallas Trading Floor, and that will give you a look-see at kind of what of what the special deal is on that. We have a special for $179 on that one. Normally, this course is like almost $400. I've taken the course; it's excellent. Options are a great way to make money in a downward trending market, or a market that is just not being difficult. So I highly, highly, highly recommend it. So until then, if I could ask you a favor, everybody, if you could like the show, that would be wonderful. So smash the like button, and then also smash the big like button. So you really like it, double like it, smash it on Dallas Trading Floor. So please like Dallas Trading Floor. I really, really appreciate it. By the way, if you are watching on TikTok, the entire show is available if you go to youtube.com/Dallas Trading Floor. You can see the whole show with all the charts properly formatted. And that's available immediately after the end of the show. So thank you so much for doing that. And again, special offer on that options course, stan.store/Dallas Trading Floor to find out more. So thanks again, everybody. I'll be back tomorrow, of course, at 5. Have your tickers ready. We'll analyze them all for everyone, and hopefully we're going to make some money in this tough market. But until tomorrow at 5 o'clock, everybody, a happy trading.